Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, comment down below. Follow me on Instagram at AIH underscore sports. Follow me on my finance channel at AIH Finance. Okay, a few things that I wanted to discuss. So I was watching Dustin's video about the disastrous inflation report that came the other day. What inflation's what 8.6%. First of all, I don't believe the government numbers. I think inflation is worse than what the government is saying. Even when the government said there's virtually no inflation over a decade ago, or maybe not decade, maybe 8 years ago. So yeah, close to a decade ago. It was virtually no inflation, they said. I didn't believe that. But, the government has its ways of conducting inflation or coming out with the numbers, et cetera, et cetera. Now, that being said, and me looking at inflation over long periods of time, and it was over a decade ago, I was saying that, hey, you're going to have inflation, right? This money printing, it's no good, et cetera, et cetera, et cetera. So, where we're at right now, we have high inflation. And usually in a high inflation environment, sports cards tend to go higher. So let's get this straight. Sports cards are tanking where there's high inflation. And if you look at the 1970s, you had sports cards going up during inflation. And some people would be like, hey, look, this is a different environment. We had the pandemic and prices just shot way above the market value. And now prices are correcting despite the high inflation that we're seeing. And some people would be like, hey, look at some of the high end cards. There's still record sales. I think there was a Joe Jackson card, P. Ryan collection, posted on his IG. He said, look, a record sale for that. Okay. So there are still record sales out there. I'm not taking anything away from that. What I'm saying, though, is it's really strange. And the best deals come when there is a hardcore crash in the global economy, when there's deflation. That's what the economists call it. And those opportunities come not all the time. Came in 2008, it came in 2020, and I believe it's going to be coming around in 2024/2025. And if I have the financial means necessary and if I'm correct, I'm definitely going to be buying. But regardless, when there is hardcore deflation, I want to be buying, right? Doesn't mean that I'm going to see price appreciation right away. That's just me. So we're looking at right now high inflationary environment, and sports cards haven't gone up. A lot of them have tanked. The big run up was in 2020 and early parts of 2021. So the other thing to look at though this year, which I don't think a lot of people are looking at, is the 10-year tips. The 10-year tips is what? Over 30 basis points. Last year and during the pandemic, it was negative, right? And what I always say is, I don't care what the inflation rate is, I don't care what the interest rate is. I want to look at whether rates are positive or negative. They're positive. And the 5-year tips, I think the other day went negative. So that's just the other thing to look. So I look at 5 years and 10-year Treasury inflation protected securities. Why do I do that? Because sophisticated investors, they look at investing from a long-term perspective. Now, some people will be like, hey, look, decent cards tend to go up 10 to 20% a year, regardless of whatever economic situation you have. I would agree with that in a normal market. Now, the fact is, if these rates continue to become more positive, even in an inflationary environment, I mean, the sports cards probably won't do so hot. They won't do as hot as they did a couple years ago. And the other thing I want to note about this whole inflation situation, a lot of the inflation that we're seeing right now is because of geopolitical events. So if geopolitical events were to suddenly wind down, then inflation would probably go down. Oil prices would probably go down. If you have China, which opens back up because they were locked down, then guess what? Some of the supply chain issues that we're seeing would probably improve. And some of it has improved. And some of the retailers like Target, they have just way too much inventory on hand. So it's an inflation environment. They have a lot of inventory on hand. So that's a weird situation that we're seeing right now. Now, just going back to the inflation and interest rates, I told you I look at long term perspective. Why do I look at the long term? I look at the long term because that's, once again, what smart money does. And what's quite interesting, if you go out 5 years, 10 years, etc., right? The 5 year treasury, it's yielding about 3%. And right now, inflation is 8%. So the bond market, I consider them to be the smartest guys in the room. A lot of people say that. And why is their interest rate? This is a question that Jeff Snyder, an economist, stated. Why is their interest only yielding 3%? 10-year yield, approximately that. What is the bond market pricing in versus what we see today? And what we see today is inflation. Yeah, that's bad. But what's the future pricing in? Not too much inflation. So it looks like that we're probably headed for lower prices in the coming years. May not happen today, but looking at the bond market saying, hey, look, it could be a hardcore deflation short term. What a lot of people, even economists that I like, what they don't factor in is the credit. So short term, you print money, you get inflation. Yeah, I got that. That's why I was buying sports cards. But when this boom bust cycle ends and the economy just blows up, then people don't pay their credit cards, they don't pay their mortgage on the houses. It's all this deleveraging going on, and that's deflation. And that's probably going to happen, like I said, in a few years. And these high oil prices, they're probably going to be coming tumbling down during that situation. And then the Federal Reserve, the government's going to try to pump it back up. And when they try to pump that back up, regardless of how they do it, whether it's a universal basic income, whether it's printing money, etc., that's when I want to be buying sports cards. So right now, during this environment, yeah, even if the Federal Reserve stops raising interest rates, they put a halt to it, you could see a dead cat bounce like I've been talking about. But ultimately, I want to be aggressive, very aggressive, when this whole thing unwinds. And that's when I could see, they used to call in the gold mining industry like 10 baggers, 30 baggers, meaning like it goes up 10x the cards you buy, 30x, right? So some ridiculous amount. Like I see some people saying that, hey, you should be able to make money in any environment. Sure. I mean, during the strike last year, I could have been buying a whole bunch of Willie Mays autographs. I bought a few, but I wasn't really trying to make a whole lot of money in the sports card memorabilia industry because I made ridiculous amounts of money. What, starting 2018, I've told you, some of my cards 20x'd, some of my cards 6x'd, 5x, 6x within a few years. That doesn't happen in normal markets. So that's why I'm being very patient. And yeah, some of the autographs, Willie Mays autographs that I bought last year, could I flip them right now? Yeah, but I don't want to. I want to maybe sell one down the road, which finance one of my purchases for his for the other autograph that I have for my own personal collection. And yeah, down the road I may sell that, but I definitely want to keep that for now, unless I'm forced to sell it because of financial reasons. But regardless, so yeah, we have lower prices. Prices are tanking during an inflation environment. And you usually see this type of action in a deflationary environment. And when there's deflation, hardcore deflation, and you have way positive interest rates go much higher, substantially higher, that's where I want to be aggressive, right? There's a time to be aggressive and a time to, be like Mayweather, just stay in the ring, just chill out, just walk around, that's what I'm doing right now. I'm not being aggressive. I'm buying things for my collection here and there, but to be aggressive, that for me, it's not what I want to do. I know some people are going to be like, "No, I'm going to still be buying some of these expensive cars." I'm like, "Go for it." All right? I'm not playing that game. Anyways, guys, let me know what you think about this. Remember to smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.